Just check now. Is that audible now? Yes. Are you able to hear me now? Hello? Hello?
Yes, ma'am.
Hello?
Yes,
Okay.
ma'am, you are audible.
Yeah, fine. So can you also unmute and speak so that I'll see whether it is audible from my side also? Yes. Can you just unmute? Hello?
Yes, ma'am.
Yeah, the thing is I'm not able to hear you. I don't know what went wrong with this. Okay. Fine, I don't know what was about the output device. Okay, if you have any doubts, you can post it on the WhatsApp group itself, okay, so that I can answer you. Okay, so it is nothing like, I don't know why the output is not coming. Okay. Just a minute. Yeah. So let's go about with the class. Hello. Yes. Okay. So I was talking about royalty and technical know-how fee. So royalty and technical know-how fee, how do we deal with it? It is in cost accounting standard 20. So when it is paid in lump sum, it is measured based on the benefit that is ensured for current or future period. It shall be determined based on the production or service volumes estimated for the period over which the asset is used. With regard to the finance cost and imputed cost, of course it's not included. Okay. So, are you still there? Are you following me? Yes. Yes. Are you able to hear me? Shall I continue? Okay, fine, then. Okay. Yeah. So coming to amount of royalty technical know-how fee, the other things are relatively simple, which is the same across all the cost accounting standards, such as the provision on subsidy grant incentives, penalties, damages paid by the paid to the statutory authorities or other third parties. These will not be included, or it will not be part of a royalty and technical know-how fee. Credits or recoveries relating to the amount royalty and technical know-how fee needs to be adjusted for. And any change in the cost accounting principles applied for the measurement should be disclosed, and it should not be changed from time to time. That is, it should not happen frequently. So while coming to assignment of cost, this is very important. That is the royalty and technical know-how fee, which is directly traceable to a cost object, shall be assigned to the cost object, and which is not directly traceable to the cost object. Then how do? We do it based on either units produced or units sold or sales value. So we have already looked into a problem wherein the royalty calculation was made accordingly. Got it? So now let's move on to the next cost accounting standard, which talks about quality control. So this is cost accounting standard 21. So basically, while we look at quality control measures, one is preventive and another one is aftermath of production. Preventive in the sense, before any defect happens, whatever steps are taken to regulate the quality, that is also a kind of a quality control expense. Another one is after the particular defect happens, how do they detect it? That is also part of quality control expenses. So these are the two main things that you got to remember. So one is called the prevention cost, another one is called the appraisal cost. So when we look at the principles of measurement, if it is incurred in-house, that happens in the company itself at its cost, then whatever is the cost of resources utilized for doing that in-house quality control will be taken into consideration. If it is from the outsiders, then it will be again on the basis of invoice or agreed price. So which is including duties and taxes, net of all your trade discounts other than the cash discounts. So you should be careful about it. Then such cost shall include prevention cost, appraisal cost. So there are two quality control expenses, two types of quality control expenses. One is the preventive cost, prevention cost, and another one is appraisal cost. These two things you got to remember. Then coming to the finance cost, imputed cost, all those things are all the same as it is applicable in other cost accounting standards. So that is not much of a thing in quality control expenses. Identification and allocation is very, very important. Then we move on to cost accounting standard 22. This talks about the cost accounting standard on manufacturing cost. So as of now we have seen production overheads, administrative overheads and all stuff, right? Selling and distribution overheads, administrative. So what do we take as manufacturing cost? Okay, that is what is dealt in cost accounting standard 22. So if you look at the principles of measurement, yeah, so I'll just directly go to the principles of measurement. So coming to manufacturing cost, for each excisable good shall be measured separately. That is, if you have final products, different final products, okay, so you have to prepare cost statement for each of the final product that is reported under sales. So for example, in case of sugar and distilleries, the final product, or I would say so the final product in sugar and distilleries is sugar and then the spirits, and all other byproducts will also be reported, but especially two cost statements should appear, for one for sugar and one for distillery. So for each of the product, the cost statement should be there, and that will comprise of the manufacturing cost also. So it is an aggregate of both direct and indirect cost, that is the cost of production. So material cost, cost of input received free of cost or at concessional value from the buyer of the excisable good shall be considered for determination of manufacturing cost. So that is nothing but the bought out inputs, okay. And then the material cost of normal scrap, defectives, which are rejects, shall also be included in the material cost of excisable goods manufactured. So it cannot be excluded, it needs to be included because that is also a cost. But in case there is sale of scrap, that time it will go as an adjustment. Of course, we will look into it as soon as this cost accounting standard is done. We will do a problem on such defects, rejects, reworks and scrap, which will give you a fair idea about how to treat each of them. So employee cost for each of them should be separately measured. Utility cost for each type of utility should be separately measured. As we have already seen for utilities, the cost accounting standard says that different cost statements for utility should be separately prepared. It should not be clubbed together. Packing material cost used for each type should also be measured separately. So if excisable goods are transferred or dispatched duly packed, then the cost of such packing shall include cost of all types of packing in which the excisable goods are removed from the place of removal. Direct expenses, repairs and maintenance, depreciation and amortization. So it is actually your cost statement. R&D, cost incurred after the split off point. shall be measured for each of the joint or byproduct. So I circulated one PPT. Then there is an example, how do they do after the split off point. So before the split off point, how this cost can be allocated. Either it could be allocated on the basis of consumption of inputs, or it could be allocated on the basis of the number of units produced. Okay, so that is how we deal with joint or byproduct. And when it comes to royalty and technical know-how fee, the same thing is applicable as we have seen in the cost accounting standard for royalty and technical know-how. If it is lump sum, it needs to be amortized over the period of benefits. Then comes to quality control cost, manufacturing overheads. So all these are exactly, it goes by the cost accounting standard. If you see, there will be a reference given over here regarding your cost accounting standards. Okay, so it's there in the book, but not here. Okay, representing procurement of resources. If you procure, of course, invoice or agreed price is applicable. And then coming to, inputs received free of cost or at concessional value from the buyer of excisable good. So that is also important. So what do you do in such a case? So in case any input material, whether direct or indirect nature, including the packing material, is supplied free of cost or at concessional value by the buyer of the excisable good, then the cost of such material shall be included in the manufacturing cost. For example, amortization of cost of molds, tools, dies and patterns, and cost of packing material, etc., received free of cost or at concessional value from the buyer of excisable goods shall be included in the manufacturing cost. So this is, and work in progress, progress stock. This is something important. So stock of work in progress shall be valued at cost on the basis of stages of completion as per cost accounting principles. Opening and closing stock of WIP shall be adjusted for computation of manufacturing cost of an excisable good. So you know very well the basic cost statement. So first, in the direct materials, we adjust opening and closing stock of raw materials. Then after adding the works overhead, I mean the factory cost, while arriving at the factory cost, we always add and deduct the opening and closing stock of work in progress. When coming to cost of production, and while we move on to cost of goods sold, the difference is we add and deduct the opening and closing stock of finished goods. So this is how the stock is being treated at each and every level. Okay, so while we come at cost of production of the manufacturing cost, there we adjust for opening and closing stock of work in progress. Fine. So are you all with me till now? Any doubts, just post in WhatsApp. Okay, so shall I proceed further? Yes. Now coming to cost statement. Yeah, even if you send a thumbs up, that's fine. Yes. So cost statement showing the manufacturing cost. See here what is the cost information. So always whatever annexure, whatever statement is prepared as part of cost audit report, or whenever a cost statement is represented, it is just not the price or the amount. It is backed by the quantity that is produced or involved in that particular production. And we calculate always cost per unit. So that is why part A will be the quantitative information, part B will be the cost information, which will take the cost from here, quantity from the quantitative information, and find the cost per unit in this manner. So this is applicable to all kind of cost statements. Okay. So here if you see, these are all direct material consumed, process materials. So here even chemicals will be added. Utilities, direct employee cost, direct expenses, consumable stores and spares, repairs and maintenance, quality control, R&D, technical know-how. See the sequence. So we have all covered this in our cost accounting standard. So each and every kind of a cost, these are all the important costs for which you have guidelines as per CAS. So which needs to be followed in those lines. So depreciation, amortization, other manufacturing overheads, we add or less work in progress adjustments. That is, add opening stock, less closing stock. Less credit for recoveries, packing cost, cost of inputs received for free or at concessional value from the buyer. All these put together is the manufacturing cost. So this is how the manufacturing cost statement looks like. Got it? Yes? Any doubts? Shall I proceed on to other cost accounting standards? Yes? So you just post a thumbs up, so I'll have that and I'll further move on. Okay? Yes. So coming to cost accounting standard 23, it talks about overburden removal cost. So this is something new. What is this overburden? What is this overburden removal cost? So this is very much peculiar and particular to mineral extraction kind of industries, wherein if you have to extract minerals through mining, that can happen through mining. So if you have to do it through mining, that is something beneath the earth surface. So what is on the earth surface needs to be removed off, and then the minerals needs to be exposed, and then the mining will start. So what I would say is the top layer of the earth, which is dug down, okay, which is cleared off in order to facilitate the mineral extraction, is called overburden. And that overburden incurs a cost. You incur a cost in removing that. So how to treat that particular overburden removal cost is what is discussed in cost accounting standard 23. Okay, so here I will take you through few of the important definitions which you need to understand before getting into the cost accounting standard. So what are those definitions? So let me give you those definitions. First, what is overburden? It is the overlying materials generally having no commercial value. Like for example, there is a mountain and the mountain is having the iron ore in it. So what you got to do? First you got to remove all the top layer of the mountain so that the iron ore gets exposed, and then the digging happens actually. The extraction happens. So the thing that you are going to remove on the top layer of the mountain, or sometimes even the mountain itself, we don't know where the iron ore deposits are there. So that actually carries no commercial value. That is, if you cut down the trees and other things, what commercial value it will have? You are going to take off the top soil. What commercial value will it have? It won't have. That is called overburden. When you come to overburden removal cost, so whatever cost is incurred to remove that overlying material from the mining site. So sometimes they even bombard the a mountain and clear off the top layer. Okay. So that is called overburden removal cost. Okay. Then there is something called stripping activity. What is this stripping activity? It is the activity of overburden removal that benefits the identified component of an ore to be mined by the entity. So that act is called stripping activity. So there is something called stripping ratio which is used. So it is the ratio of excavation of overburden to ore. That is how much ore you are extracting. To that, the ratio of excavation of overburden, this is compared. So generally overburden is measured in cubic meters and ore in tons. So how it will be, the stripping ratio will be metric cube divided by weight of the ore in tons. So there are two different units of measurements being used. So that is called stripping ratio. Okay. And then this is mainly applicable for mining industries. Okay. And then coming to another definition that we got to know is current ratio. So as such we know the current ratio as per ratio analysis, current assets by current liabilities, but that is different and this is different. The ratio of overburden removed to mineral produced in a particular patch of mine during the year is what is current ratio. So how much quantity of material includes the production and mineable mineral lying exposed. Okay, it is not just production, whatever is not extracted, not that one, it is also the mineable mineral which is lying exposed. All these things is the quantity. Then comes quantity of overburden removed is the net quantity after adjustment of opening and closing advance of stripping quantities. So this divided by the quantity of mineral will give you the current ratio. So this is a different kind of a current ratio which is actually measured in a mining industry. Fine. So these are the important terminologies that you got to know. That is stripping, what is overburden removal cost, what is stripping ratio, what is current ratio. So please check all these things. So this is particularly in case of a mining industry. So while we move on to the principles of measurement, overburden removal cost shall be aggregate of both direct and indirect costs relating to overburden removal activity. So here we are speaking just about the overburden removal cost and not about the mineral that is extracted. Mineral extraction measurement is not actually spoken about here. So coming to direct cost, what are all be there in case of direct cost? Well, we look at overburden removal. So it includes the cost of consumable stores, spares like machinery spares, explosives, see detonators that they usually use to bombard a, a mountain or something, manpower, equipment usage, utilities that you need, payment made directly to the contractors. So sometimes you might not be involved, you will be having some contractors in place to do so, and other identifiable resources consumed in such activity. So these are all directly related to the overburden cost. Then what are these indirect costs? So it could include the cost of resources common to various mining operations, including overburden removal activities such as manpower, administrative overheads, loading and unloading of equipment usage, and other costs allocable to such activities. So which is not directly related to your overburden removal will fall under indirect cost. So it is actually attributable to the development phase of a mine area which shall be capitalized as non-current asset when it is probable that future economic benefits to the area will flow to the entity. This is a very important point. So I say it is overburden removal cost. See, only once the strip is removed, the upper portion of the mountain or let it be a plain surface, it is removed. It is once for all done. Later on, it doesn't happen again and again, right? So it is like one-time process. So you have to amortize that cost. You have to take that cost attributable. It is just the development phase of a mine. So before you dig down the minerals, before you extract the minerals, whatever is happening at the initial stages is the overburden removal cost. So then what are they talking about it? If that is going to be a one-time cost, and the benefit is going to spread across till the mining is going to happen, then it shall be capitalized as non-current asset. Okay, so this is one of the important point that you got to remember. The overburden removal cost attributable to developed area of mine shall be charged to production of the ore at the standard stripping ratio. So you know what is stripping ratio. So the overburden removal cost attributable to developed area shall be charged to production based on the standard stripping ratio irrespective of actual stripping ratio for each year in the cost statement. The difference any with the financial statement shall be shown in the reconciliation statement. Then it shall be measured. How do you measure it? By multiplying the number of trips undertaken by the equipment for overburden removal or by any electronic mode. So measurement at regular intervals may be carried out by volume or physical verification to arrive at the fair quantity of overburden removed. So final assessment is based on the scientific technology or methodology. Then coming to current ratio, which we have already discussed. Then cost of overburden removal activity, if it is outsourced to someone, then the agreed price will be taken into consideration. And for each mine, it should be computed and considered separately. It should not be clubbed together. And anything which is abnormal in the sense, then it needs to be actually excluded from the calculation from overburden. So for example, see, examples are really interesting. Fire or cave-in or flooding and other similar events of abnormal circumstances you will consider. So you will not include in the calculation. So coming to fine, penalties, interest and finance charges, change in cost accounting principles, it is the same across all the cost accounting standard. So this cost accounting standard is very specific to the mining industry, which is not applicable to any other industry. So the terminologies might be quite different. Okay, so you got to just make a note of it. But I don't think so we have got any question on this particular cost accounting standard, because it's very specific. It's not a general one that you usually come across. Okay. And then the last one is cost accounting standard 24. So I'm happy to discuss the last one in the cost accounting standard. So that is revenue in cost statements. How do you treat revenue in cost statements? So we are talking about cost, and here they are talking about revenue. So revenue can be revenue generated through sale of scrap, or it could be revenue of some sales of byproducts. All these are credits given to our cost. So that is going to considerably reduce our cost. So here basically all the references will be made to the cost factors. So when we come to the principles of measurement, okay. So revenue from sale of goods or services provided during the reporting period shall be measured based on the net sales realization. So you know very well it is net of taxes and duties, and what is our revenue from sale of goods and services, as I have already shown you the P&L account, right? So if I just look into that particular statement, so it is the net sales realization, we won't take. So it was in the beginning. So let me just see. It was initially I posted. Just a minute. I'll just open that statement. This is something which we already had. So it was in the first class that where I discussed about it. Yeah. So I'll just open this up. So value come. So are you able to see that screen? I don't think so. I've just switched over, but this is not switching over. Give me a second. So now are you able to see the report? No, I don't think so. This is not visible on the screen. Just a minute. This is not changing. Give me a second. Yeah. So now are you able to see my screen? Hope so. Yes, now it is visible. So while coming to this particular annual report, I think you know about it. So what do they speak about when they say net revenue? Okay. So while I look at the P&L account, just give me a second, I'll just move on to the P&L account. This is the balance sheet. Yeah. So over here, you have something called gross sales less excise duty. Then you have other income, and then you have increase or decrease. So I'll just zoom in. Yeah, hope you are able to see this. So here if you see the net revenue that they are speaking about, net sales realization is basically gross sales less excise duty. This is the number, and not this other income. Other income is something which is not related to your revenue. It will form part of your reconciliation. Increase or decrease in stock is also an adjustment of stock and nothing else. So when we are talking about the revenue, right, so sometimes what happens is theoretically we may know that revenue means net sales realization, but while it comes to reading through the P&L and the balance sheet, so we get confused. What do I have to take as net sales realization? Whether it should be my total of income in P&L account, or whether it should be the net sales, which is gross sales less net of duties. So here it is an old report where excise existed, so that is why you have excise duty over here, or else you basically have the adjustments towards GST and you get the amount for net sales realization. Okay, so then revenue from sale of joint products shall be measured separately for each main product or service sold. Then revenue for sales or services shall be measured separately for unit or location of an entity for each type of goods or services produced. Like for example, in some situations, like in highway laying constructions, okay, they might be having multiple projects. So each and every project will be taken as a cost center, and in that the cost will be booked. Of course, like a profit center wherein the revenue as well as cost will be booked separately based on the projects. So it depends upon the nature of the industry and the type of the industry and the way the accounting is actually happening there. So revenue from sale of goods or services shall be measured separately for sale of each type of byproducts, defectives, second grade products, rejects, scrap, spoilage or waste. So this should be shown separately, so the credits will be given accordingly. Okay. So here if you see they have made all the references to cost accounting standards, because here the cost is recorded and the revenue at each of the stage. Like for example, cost accounting standard on material cost. So if there is any scrap of that material which is sold out, then that will be reduced from the material cost. So you have certain things, so it will be treated as a reduction in the related cost. So that is why they have given wherever that particular revenue you are recognizing, okay, so wherever it is applicable, there it needs to be adjusted for. So this is cost accounting standard 24, which talks about the revenue recognition stuff, revenue statement. So this is the only standard that speaks about revenue and not the cost. Got it? So cost accounting standard 25 is in the exposure draft level. So we will be soon getting cost accounting standard 25 also on inventory valuation. So now what I want to do is, I want to take a problem from the book on defects and scrap. Okay, we will work on that and we will work on the variance numbers. So I'll tell you the page number where we can find out. Okay, I'll give you the page number. So today we are going to conclude this chapter. So let's move on to illustration 16, page number 281 of your book. Okay. So it is this one, illustration 16. Okay. So let me take this off. Yeah. Standard material requirement to produce 1000 units of product X is 1200 units of material at a standard price of rupees 60 per unit. So, my final product is X. So, for producing 1000 units of X, the raw material that is used is 1200 units, which is used, if you see, at a standard price of rupees 60 per unit. So 1200 units is the material, and the cost, if you see, it is 60 per unit. Maybe I'll just, hope this is visible. Okay, so what is my total cost of raw material in this case? 1200 into 60, 72,000 rupees. These are my standard. Okay, this is not the actual. What does the standard say? The standard says the standard allows for reject of 25% of input. So 25% of input are rejects in case of raw materials. So isme 25%, which is 300 units, which is rejected. Then what else they say? It is estimated that 1/3 of the rejects are reworked at an additional cost of rupees 20 per unit. Matlab 1/3 of the reject is rework. So this is 25% of input. 1/3 of reject is reworked. So 1/3 is basically 100 units, which will be reworked, which is reworked at a cost of additional cost of rupees 20 per unit. So there is 20 rupees rework cost. So that gives me 100 into 20, 2000 rupees. So this is my additional cost due to rework, and whatever is remaining will be disposed of as scrap. So if 1/3 of reject is rework, then 2/3 of reject is scrap. So how much is the scrap? 300 minus 100, 200 is rejected, and this is sold at, so it is a revenue in this case at 5 rupees. So how much is my revenue? 200 into 5. So if you look at the total cost in this case is 72,000 plus 2,000 minus 1,000 rupees. So I can make a statement that is a standard material cost statement, wherein I take into consideration particulars and amount. So this is my cost for the material. So material cost 72,000 rupees, add rework cost, which is 2,000 rupees, and then less scrap revenue, which is 1,000 rupees. So it comes to 72,000 plus 2,000 minus 1,000, which is 73,000 rupees is the material cost. So if I have to measure cost per unit, then it is basically so there are 1,000 units, of which 200 is, so 1,200 units that go into, of which 200 is rejected. So 1,000 units is the final unit of production. So what is cost per unit? It is 73,000 divided by 1,000 units that is produced. So 73 rupees is the standard cost per unit. That is standard material cost per unit. So did you understand this? How I have calculated the standard material cost and how we have taken or gone by the rejects, rework and scrap. See, scrap is giving a credit. This is called a credit, whereas the other is the additional cost. So you have to always adjust for the revenue that you are getting from your credit. Got it? So did you understand this part? Any doubts? Any doubts, you just post it in WhatsApp. If it is fine, then shall I move on? Just show your thumbs up and we move on. Okay. So this becomes the standard material cost. Now coming to our actuals. What is our actual material cost? What actually has happened? Okay. So while coming to actual material cost, they say during a particular period, units produced were 19,500 with 24,000 units of materials at standard cost of rupees 60 per unit. So if you see the units, material units, I'll put like this. So if you see the material purchased, it is 24,000 units material purchased at a standard cost of 60, so into 60, 14,40,000, of which rejection, how much is the rejection? Rejection is 7,000 units. So that is what they are telling. 7,000 units were rejected, out of which 2,500 units were reworked at a cost of 51,000. So here add rework cost. So out of 7,000, 2,500 units were reworked at the rate of 51,000 rupees. So this is an additional cost less, so scrap realization or scrap sale. So out of 7,000, 2,500 is reworked, so 4,500 is rejected, is scrapped, and it is sold at how much rupees? It is sold at 5 rupees per unit. So this into 5, 22,500. So what is my total material cost? So total material cost is this plus this minus this, 14,68,500. The projector is on and off, going on and off. So that's what. So 14,68,500 and this 14,68,500 divided by, what is your final output? 19,500. So 19,500 is going to be your actual cost. Got it? So basically it is an adverse thing because 73 over here and 75.31. If you look at the material cost, there is an adverse variance. You incur, or unfavorable variance, you incur an extra 2 rupees 31 paise for it. So what does the question ask you? The question asks you about calculate the material quality variance and scrap variance. Okay. So if you see what is my actual material cost and what is my, so it is basically how do I calculate the actual material cost variance. So material cost variance, one thing is about the rate, other thing is with the quantity. So how about we go with the rate? So if we look at material quality variance, what is my actual material cost? Minus what is my actual quantity into standard rate. So here what I can do is I can put a simple formula saying actual quantity into the actual material cost, okay. So actual rate minus the standard rate. So if I do like this, then also you will get the same answer. So actual quantity is 19,500. That is what is your production. So 19,500 into your actual rate is 75.31 minus your standard rate is 73 rupees. So if I go by this formula, I think I'll get the same, which is 45,045. So since this is excess, you are having an adverse variance with regard to material. This is, I would say, it is cost variance or material price variance. It is basically on the price. And while I look at the usage, that becomes material usage variance. So how much is the difference in the usage? So I keep the standard rate as it is multiplied by actual quantity minus standard quantity. So what is my standard rate? My standard rate is 73 rupees. Okay. But what is my actual quantity consumed? Actual quantity is 24,000, whereas the standard quantity is, I have to do the calculation for that, minus. So for 1000 units of output, I use 1200 of raw material. Okay. So for the output for 24,000, how much is my usage over here? So 24,000 into 1000 divided by 1200, which is 20,000. So 24,000 minus 20,000. Just let me check. 1000 units of product X, 1200 units of material. Here raw material is used. If it is 19,500, how much raw material do I require? 19,500 into 1200 divided by 1000 output, which is 23,400. So basically 24,000 units is the actual quantity, but if you look at the standard quantity, it is 23,400. So in this case, it is adverse to that extent. Okay, because if it is 1000 and 1200, 23,400 should be your actual consumption, but you have consumed more of raw materials, which is an adverse quantity. So did you understand this, how we have calculated this, or you want me to repeat it? If you want me to repeat it, I can do it. Just post in WhatsApp, because I am not able to hear you, as well as the chat box is not working. Are you able to understand why it is adverse? So here, based on output, what should be your actual consumption? So your actual consumption based on 19,500 should be only 23,400. But what you have actually consumed is more than that. So it is on the adverse side. So this particular variance is adverse variance. So both are adverse. Then coming to our scrap variance. So what is my actual scrap? Though both the scrap are sold at the same price, so there is no price difference or price realization difference in scrap. It is 5 rupees as per the standard and as per the actuals also. Now the problem is with the quantity. So for example, in case of 1000 units, what was my scrap? 100 units was scrap, right? So in case of 1000 units, 100 units was scrap. In case of 19,500, what should be my scrap? So if I do a cross multiplication, Will it work? It is 1950. And what is my actual scrap? How many units? It is 4500. This should not be the case. Just a minute. Yeah, scrap is 1000 and over here 1009. Scrap is 100 and 1950, and what I actually incur is scrap is 4500 units. 4000 minus 1950 is how much? 2550. But if my standard rate is same, okay, so I will do a calculation like this. That is, for 1000 units, they are telling of the input 1200 may 25 percentage is rejected, and if 1/3 is work done as scrap, then 2/3 should be your scrap. Okay. Similarly, if I do the calculation over here, my material input is 24,000. Just my 25 percentage will be rejected, of which 2/3 should be scrap, which is 4000. Whereas my actual scrap units is 4500 units. So there is a difference of 500 units that I am feeling, and that 500 into 5 comes to 2500. Are you able to understand this? If I go by the standards, how it should work? Yes? So actual scrap is 22,500. If I go by the standard of this, 4,000 into 5, 20,000. So 20,000 and 22,500, 2,500 is the difference that I am getting as scrap. So do you think this is adverse or favorable? It is adverse because your scrap is pretty much higher than your actual scrap. Are you able to understand? Yes? Any doubts? Or do you want me to come again on the scrap part? Shall I come again? Or is that understandable? Fine. Others who are online, any issues? Don't go by the book answer. So relatively, if we see what was our scrap as per our material input, what was allowed is the standard, what is not allowed is the actual. Got it? So shall we move on? Yes? Okay, so let's take a 10 minutes break and then we will start afresh with cost auditing standards as well as cost audit program, which is very important. Okay, so I'll just mute myself and let's take a break for 10 minutes. Yeah. Hello. Okay, let's start with the session. Let us resume. So today we are going to discuss about cost auditing standards. This is CAS, but this is not cost accounting standard, this is auditing standard. So here we have few cost auditing standards that we need to keep in mind while doing cost audit. So one is how to plan an audit of cost statements. Cost auditing standard 1 or 2 talks about cost audit documentation. What are the documentation that a cost auditor should do? And yes. And then we have Cost Audit Standard 103, which deals with overall objectives of the independent cost auditor and the conduct of an audit in accordance with cost accounting standard. And the last cost audit standard is 104, talks about knowledge of its business, its processes and business environment. So all these cost auditing standards, let us go one by one and look into the major points. So first is Cost Audit Standard 101, which deals with the planning and audit of cost statements. Sorry for that. So if we look at the objective of this standard, what is the objective of this standard? Is to guide the members in planning for the audit of cost statements in an efficient and effective manner. So audit plan, audit risk, it remains the same. So I'm just going to get into the requirements. This is very important. Like we have principles of measurement in our cost accounting standards. Similarly, we have some requirements as per cost audit standards. So how do we do it? Prior entering into the planning phase, first what should he ensure? What a cost auditor should ensure? He should ensure that he has received a letter of appointment and legal formalities, whatever is required for his appointment is complied with. Only then you will start the work for that particular company. And an understanding of the terms of reference, including the units to be covered, the product or services that needs to be done, scope of audit should be well known to the auditor. It's not like you just take up the industry and assume that all the sales is pertaining to or is subject to cost audit. So there could be even businesses, they could have diversified business of which one particular business may require cost audit. So the scope of audit is very, very important. Then understanding of terms of references, that is what the scope coverage. The audit partner and other key members of an audit team shall be involved in planning the audit, including planning and participating in the discussion among the audit team members. So if it is not by a single auditor, if it is by a group of them, they need to get into a discussion. And what is the next one is he has to formulate an overall audit strategy that sets the scope, timing and direction of the audit. Timing is very, very important because for the first time when you get the audit in place, you are having enough time to actually see to it that cost accounting records are being maintained, how do you get it in place, and how do you go about with the cost audit for the next year. It's not going to happen immediately, you will get a time period to work on it. But you have to always be, you should always adhere to the timelines. What are the things, what are the relevant factors while you take into consideration the overall audit strategy? First, result of preliminary activities as specified in 5.1. That is whether letter of consent, you have received it, you have given the letter of acceptance, then have you received the letter of appointment? That is very, very important. That makes you the cost auditor for that particular organization. Knowledge from previous auditors, audits and other engagements with the auditee. That is also important, whatever you have done before. Knowledge of the business. So if it is a new business, then you have to get into all the guidance notes and whatever is specific audit cost accounting rules for a particular industry, please go through it and then understand what is the nature and scope of the audit. Statutory deadlines and reporting format. This is very, very important. Statutory deadline is within 180 days from the date of or end of the previous financial year. So usually it falls on September 27th or 28th. Yeah, 28 should be your signing date. Before that, your report should be ready. And once the report is signed, within 1 month, within 1 month period, it needs to be uploaded in the Ministry of Corporate Affairs website in XBRL format. That is very important. So that is what is the reporting format. Relevant factors determining the direction of audit efforts, nature, timing and extent of resources required for that audit. That is important. So you are going to coordinate with many people on the production side. Just a minute, it is, hold on. Yeah, oh, it's fine. So you should be very careful in coordinating with them, following up and getting the information. That is very, very important. And he needs to develop an audit plan. So audit plan will include the nature, extent, timing of risk assessment, audit procedures and other activities. Then he shall update the overall audit strategy and audit plan as required during the course of audit. And documentation is very, very important. So you have to list down whatever you have come across, your findings, your checklist. These are some things that each and every cost auditor should look into. In the initial audit, he shall perform the procedures regarding the acceptance of the client relationship and the specific audit. If it's a first time thing, it will consume a lot of time actually, but later on, once you get acquainted with the business, with the operations, the clarity will be much more. And even the people from whom you get the information, they will also get well versed in what is expected out of them. Sometimes what happens is, I'll be asking for some information and the person who is taking care of that will give some other information from his point of view. So what happens, back and forth the mails will go on and off, and at one point of time it's all wastage of time because I won't be getting the actual information that I need. So that is why making your own formats and sending it on time and following up with them and making them understand what is expected out of it is very, very important. Like for example, now 31st March closing will be done and I have 180 days of time before I start the audit. So what I usually do is I send out mails with all the formats in which I need the inputs for the audit. So if those formats are sent, then they will know, okay, last year we did this way, so similarly I am going to do it this way and send it to it. So always have a track of mails that you send, because here you have to coordinate with lots and lots of people. It could be on the HR side, it could be on the production side, it could be on the management side. Okay, so the way you coordinate and the way you proactively do it will help you to meet the deadline. If it goes for an extension, the thing is penalty will be levied for that. So if you have to ensure that the audit needs to be done within the time, so you have to accordingly follow up things and get the things done before the due date. So this is all about planning an audit. That is what is spoken in Cost Auditing Standard 101. Then coming to Cost Auditing Standard on Cost Audit Documentation. So there is a separate CAS given for Cost Audit Documentation. So how are you going to document each and everything? That plays an important role, because if you are going to prepare the documentation, if you are going to do it, then it will be an organized way of doing a cost audit. Okay, so that will give a better idea on how you have to proceed with for other audits, for other forthcoming audits. So whatever evidences that you have gathered, whatever formats you are using, so all that you got to segregate and put it. So for example, what does it usually contain? So this is very interesting. First is checklist of compliance with the rules. Hope you remember CRA form 1, deals with all the rules and regulations regarding maintenance of cost records. Next, cost accounting standards, that is what I showed you. Generally accepted cost accounting principles, it is prescribed by the institute. It is also there in the website. I'll show you that. See, this is. But this actually covers in all the points which are there in cost accounting standard. But this also exists. Okay, generally accepted cost accounting principles. So this is all aligned with your cost accounting standards. So these are the rules and regulations first you have to have in mind. So what I usually do from my personal experience is I prepare a checklist and I put yes or no against each of the checkpoints and see to it wherever it is not followed, I see to it they try to follow it for the next year of recording. So that is important. So you preparing a checklist is important. This usually helps you in the initial stage when a particular business is coming under the purview of cost audit. At that time you got to prepare this. So I do it in an Excel sheet. I keep the same checklist. Whenever I get a new client, I check across each of the things. But apart from this checklist, apart from CAS, apart from cost record rules, apart from GACAP, there could be certain rules and regulations which are particular to a kind of an industry. Like for highway laying, there are different models, okay, for construction industry. So likewise, you have to go through all those rules and regulations and include it in the checklist which is specific to a particular kind of an industry. Then coming to audit programs. Audit program for material cost, employee cost and others. So here we actually formulate different formats and even formats are given in the book too. I'll take you through that also. Then comes analysis. So how do I analyze each and everything? For example, calorific value of different fuels used and average cost per unit of calorific view and specific heat consumption. For example, we were talking about enthalpy value. See, I never had an idea what enthalpy is, but once I started doing it for sugar industry, audit for sugar industry, I came to know, okay, this is carrying some value. Enthalpy value is the steam and the pressure, the heat and the pressure a particular thing carries. So likewise, there could be certain unit of measurement, certain terminologies that will be different and more specific to a kind of an industry. So you have to study that and analyze and keep it separately. Even I had problems while converting units of measurements. Like sugar is reported on the basis of quintals, whereas actual sugar, that is sugar canes, is in metric tons. And the power that is generated is in kilowatt hours. Steam that is generated is in metric ton. And bagasse that is used is in kgs or something, sometimes in tons. So I have to usually convert each and every unit of measurement to come to a conclusion, okay, this is what I required per unit of production. So getting well versed with all these things is also important. Then coming to audit query list. So contains a log of audit queries raised and their resolution. So it is just not enough if you ask why. You should follow up and get the answer for why is it done so. Okay. So that way it should be complete. Abstracts of significant contracts. I'll just switch this off. Yes. It is too much of nuisance. Yeah. Abstract of significant contracts relating to cost and revenues. These contracts are also very important. What contracts you have with the third parties, that needs to be taken into consideration. Letter of confirmation, that is stock of materials with the subcontractors. These are all examples, okay. Letter of representation from management correspondence, including email concerning the significant matters. Then abstracts or copies of entities records. So nowadays we get all the soft copy. So it is much easier to store as well as to refer to. Whenever you want, you can refer to. Audit documentation may be in paper form or electronic form. So usually we make it electronic only. It's much easier to store and refer back. Okay. And then audit documentation must contain evidence of conformance to the requirement of cost accounting standards. So typical of such evidence is an adequately documented audit plan, It should be, there should be a signed appointment letter from the auditee. Minutes of discussion, so minutes of meeting will also be there, which will say that so and so decision has been taken or the appointment of an auditor has happened. So all these forms part of the records or the documentation. Fine. So that was cost accounting standard, cost auditing standard 102. Then comes, how do you conduct an audit? So first was preparing yourself, second was the documentation, third one is to conduct. So how are you going to conduct it? So there, if you see, I'll just directly go to the requirements. The cost auditor shall comply with the relevant ethical requirements, including those pertaining to independence in respect of cost audit engagements. There should not be any personal influence in your comments or suggestions. While conducting an auditor, he shall comply with each of the cost accounting standards which are relevant to the audit. And a cost accounting standard is relevant to the audit when the cost auditing standard is in effect and the circumstances addressed by the cost auditing standard exist. So all those things, like for example, cost accounting standard 23 was talking about overburden removal cost. This is nowhere related unless and until you do an audit for a mineral extraction kind of an industry or a mining industry. Okay, so that way whichever is relevant should be taken into consideration. In exceptional circumstances, he may judge it necessary to depart from a relevant cost accounting standard. So in such cases, the auditor shall perform alternative audit procedure to achieve the aim of that requirement. So I have not come across such a situation where I have deviated from the cost accounting standard. And it shall be required to exercise professional judgment in planning and performing the audit. So the way a particular cost auditor performs and plans for an audit will be different from another cost auditor. So that is why it is a piece of art also. It's not just science. Okay. So it is art and the practice which helps them to decide what needs to be done, how I want my documentation to be done. Okay. The ultimate goal is it differs from person to person, but it's necessary that they have all those documentations in place. Fine. So how do you, the conduct of audit. So how are you going to conduct? Standard, the cost auditing standard deals with general responsibility of the cost auditor as well as cost auditor's further consideration relevant to the application of those responsibilities to specific topics. In performing an audit, the cost auditor may be required to comply with legal or regulatory requirements in addition to cost auditing standard. Okay, so apart from that, if there is any legislative or regulatory requirement, even they got to go by that too. Professional skepticism. Skepticism is nothing but a doubt. An attitude of doubt towards critical assessment is very, very important. So we always say we are like auditors or watchdogs and not the bloodhounds. So similar way, you have to be skeptical in each of the thing that you are going to actually go through your audit. So this is very, very important, and you have to gather audit evidences, you have to question them, you have to follow up and get the replies back. And once you are satisfied with that, then you conclude that particular audit. Fine. So next what I want to actually take you through is, I'll just tell you. So if you move on to cost audit program, okay, so this was all about cost auditing standards. 103 is done. So cost audit standard 104 deals with knowledge of business processes. There are only 4 cost auditing standards. Knowledge businesses and its process and business environment. So this I have already spoken about a lot of times. So now we directly move on to cost audit program. So how are we going to decide our cost audit program? So I'll just take you through some of the formats that they have recommended. This can be used. So let me just take you through that one. Cost audit program. See. So in planning the audit assignment, there are certain important factors which are taken into consideration. One is requirement of audit personnel for the assignment. Next one is documentation. Next one is quality control exercised over the performance. So if I have to document, how do I document? So I was talking about certain formats, right? For example, I have to do audit of product wise. So how will that look like? See? Inventory balance of each of the finished product. If it is product, I will compare opening stock, closing stock and sales to say what is the production for the year. Got it? So these are the formats. Utilization, capacity utilization for previous 5 years. So this will give you a fair idea on what are all the formats that you got to maintain. It is not necessarily you will follow the same thing. Sometimes, for example, if there is no internal transfers, you won't have that column in your format at all. Okay, so this gives you a very good guide on how to proceed with. Like for example, audit of raw material cost. If it is raw material, then it is opening stock plus closing stock. Opening stock plus purchases minus closing stock. It will give the raw material consumed. So that will be part of your format. So if you look at the format, you will see opening stock plus purchases is the total available thing. What is the consumption? Whatever you consume and whatever is remaining is your closing stock. And that too, not all the raw materials, the key raw materials which forms part of the major cost will be taken into consideration. So see how each of the thing is audited for and each of the thing is recorded. Now see, audit for electricity cost. So electricity could be generated in-house or it could be purchased from outside. So how much was it purchased? How it has been allocated to different production centers. Usually utility cost center will have an allocation that will go to different production centers. So see how it is. Then how the consumption has happened for these years. So sometimes based on your availability, and you might also have some DG set apart from in-house, apart from buying it from the state electricity board. Sometimes if there is a power shutdown, you will have any alternative source of energy too. Even that will be accounted for. So this is on electricity. Similarly, you have, see, cost of electricity generated by DG set, generator. What are all the expenses that you incur? So see what kind of expenses, whether proper meters are installed. If you look at electricity, it is a problematic area. See, when a particular company comes under the purview of cost audit, we insist upon electricity being given separately for each and every operations. So if it is a process industry, we will say what is the electricity consumption per process. And what is that for the office, what is that for the labor colony, what is that for the administrative purpose, and what is that for actual production under each of the processes. So sometimes what happens is, they might be having only 1 meter to measure all the consumption within a particular factory which has office inside it, which has also labor colony inside it, which has also its production unit inside it. So what will happen? Then you have to catch hold of the power engineer, whoever is in charge from there, and get the information or the data like how much allocation goes to the labor colony, how much allocation goes to the office use, and how much goes to actual production. So there could be challenges like that. So only when you do a factory visit, you will come to know about how the meters are set, how the machineries, what are all the machineries that are installed, how the process goes about, till what point of time it is joint product, and afterwards there is a split off point. This and all you can understand only if you understand the process, and make a process map also, which will be helpful for you. Like whenever there is a process change, you can make a change in the process map, and accordingly you can also communicate easily to them. Like the process works this way, so I want the meters to be installed here, or you can ask what percentage of allocation you expect for the electricity kind. So there could be combined meters also. So sometimes these are all certain issues that I have faced while doing auditing. So next comes audit of demineralized water cost. See how the demineralization happens, how much fresh water is taken from the river. So it goes through the RO process. Then I get the demineralized water, that is called DM water. So what are all the costs involved in conversion of river water, fresh water into demineralized water? Well, I convert fresh water to demineralized water. There is also a reject water that is actually rejected out of the process, which is of no use, which is just, it is just an outflow of water. So how much is the conversion rate? So for example, if 100 liters is my fresh water, maybe 60 or 70 liters will be my DM water. So I have to calculate the cost per unit of DM water produced. I should not calculate the cost on per unit of fresh water that I have used, because my ultimate final utility out of that process is my DM water. So for example, if it is 100 liters of fresh water that is used and 60 liter is the DM water which is produced, so that 60 liters, how it is allocated to different departments. So this cost will be allocated to different departments and that will sit in that particular cost sheet. For example, 60 liters of DM water, 30 liters is used for sugar factory, 30 liters is used to distillery. So this particular cost of 30 and 30 liters will come in the statement, cost statement of sugar and distillery separately. Got it? So I cannot show my audit file actually wherein I do lot of linkages and allocations being made. Maybe after the class I can show you. Got it? So then similarly is the steam cost. So this and all we have already discussed and done few problems on steam into power generation and stuff. Okay, so likewise there is a lot of formats. If you see in the book, there are a lot of formats for each and every kind of a thing that you can use. But when is this useful? Only when you get into an audit scenario. Till such time, this is not that much relevant. But if you are also trying to implement something in your official work, right, you can get the formats from here. That will be much useful. Wherein you maintain the records and stuff, you can get the insight from these formats. Fine. And then I'll move on to the cost audit program, which is an important question from the exam point of view as well. So it is on page number 358 of your book. Okay, I'll just move on to that. This is before cost audit documentation. Yeah. There's an entire thing in your blueprint. This is the final touch of a cost audit program, how it should be rolled out. That is overall checklist of cost audit program. Okay. So here if you see, first step is familiarization with the company. How do you get familiarized with the company? First, nature of the business and industry, objectives of the company, ownership, whether it is public, private, domestically owned, it's a cooperative society or MNC, all these things. Corporate structure, how is the corporate structure, how are the subsidiaries and ownership percentages and dates of acquisition. What are the action to be taken in each case? This will give you a fair idea on how do you make a cost audit program for any kind of an audit. Okay. Next is company records, MOA and AOA, that is memorandum and articles of association, and whatever contracts that they have, terms and conditions, everything you got to make a note of it, and that will be included wherever necessary. Familiarization with the organization of the company is very, very important, that you meet actually personally the head of finance, accounts, costing. So you have to build up that rapport so that they don't feel insecure while you approach them. Okay. So first you got to explain why we are doing this cost audit. What is the use of these reports? How it will be useful for them? Always it's like selling your value. Selling the cost concept is also important. So then you meet other directors, key managerial personnel, okay, and then delegation of financial and administrative authorities. All these things are very much necessary. And even the IT guys, it is also important to know the system in place. That is very important. Okay. Then familiarity with the organization profile, like what are the departments there available in that organization, like it could be HR, sales, production, purchase. Then familiarity with the company's policies. What are the main products, what are the byproducts, is there any intercompany transaction policies and all those things. Sales policies and sales management, this is particularly related to the sales department. Production planning and control, frequently I have been in liaison with production planning and control because they are the key person who know about, who have the process knowledge very well. So it is like we have to get a knowledge transfer from them to us whenever we have doubts. Because when it comes to the technicality of a stuff, like for example, I was telling 100 liters of fresh water, 60 liters is my DM water, 40 liters is my reject water. How did I know that? Only the person who knows, who is into the production, will give me the ratios. Like itna pani andar jata hai, so this pani gets demineralized and this goes as the reject water. The reject water goes to the effluent treatment plant and it is let out in the fields. So this is how you got to visualize things. You have to get lot of information from production heads. That is very important. Accounting systems is very important in the sense because the quantitative details flows from production department, sales department, HR department, the quantitative information. But what about the financial information? It comes from the finance system. So you should get familiarized with the ERP. First, get the chart of accounts. See to it, what are the ledger account codes which are used wherein the booking happens actually. So they will have a list of list of accounts, ledger accounts of which is forming part of chart of accounts, and this will help you to see where the cost of getting booked. See, there are umpty number of transactions that happens throughout the year. You cannot go transaction by transaction. So you should know the ledger account, basically where the major cost goes and hits and what is the reason behind that cost. Okay, so knowing the ERP system in place is very, very important. Because also there could be certain ERP systems, like if it is SAP and stuff, you have their own or you can customize your reports there and you can just extract it with a click of a button. It becomes easier. But when there are multiple systems, like quantity production is in one system, finance is in another system, at that time it becomes difficult to coordinate and bring all these things together. So accounting system is very, very important. Management information system, that is basically about the budget and the standard costing. So there are only few companies who maintain this standard costing system. Many don't. They just ignore and they just go about with budgeting alone. So you got to check whether there is any standard cost in place. So how this standard cost has been arrived at, you have to actually get in liaison with the engineers, the product engineers. So they will have a fair idea about why the standard cost has been set so much. Okay. Then internal audit system, is there any internal audit system? Because if you catch hold of those people, you can be like, you need not duplicate your work. So whatever they have audited, go by that and also check through, it will be much easier. So there should be an existence of internal audit. Cost record statements and reports. This is also very important. So here they have given the illustrative time, like one-time information, what are all the things that you have to get. So why I am going in detail is, somewhere they usually ask, as a cost auditor, or what are the steps you will be taking and stuff, and what is the process of cost audit and stuff. You can always give the points from this cost audit program. It becomes easier to write the theory questions. Okay, I think last year or before that session, there was a question on cost audit program in specific theory questions. So you should not be like beating around the bush. Please be to the point. Like for example, one-time information, what are the things you got to collect? Organizations chart, process of manufacture. I have even seen companies wherein they don't have this process and all, flow chart. So sometimes we have to build our own process and get them checked with them, is this the process flow? because they don't concentrate much on documenting things. If you see, many companies or the small companies don't concentrate much on documenting things. But if you look in MNCs and all, right, there is always a standard practice document. They'll have lot of training documents which will give you the process flow. Now here you have list of cost center, machine details, cost center details. So there are a lot of systems. And what is the data required for the audit period? Balance sheet, P&L, and the schedules. Schedules is nothing but which I showed you. These are the schedules. If you look at here. So here they have listed the schedule 10, 11, 12, 13, 14, 15, 16. These schedules 10 to 16 are related to my P&L. So whenever I go through the schedules, usually I scan through the P&L schedules, because that will have a lot of information like raw material consumed. See, these are the entire details. And even if I have doubts of if something is ambiguous, I will get into those chart of accounts and check for that. Okay. So this is all about cost audit program, which is very important from the exams perspective as well as from the cost audit perspective. Okay. So I would like to conclude here my session. So from the next session onwards, we will be almost going through the few parts of cost audit and then move on to management audit. Fine. So almost 50% of your syllabus basically depends on cost audit. So you have to get well versed yourself with cost audit, cost accounting standards. Cost auditing standards is not that important, but still know it, what is there. Cost audit program. Then what are all the forms like form CRA1, form CRA2, form CRA3, form CRA4, what each of the forms speak about and what are the deadlines to be met. Okay. And of course cost auditor qualifications I have not covered yet. So I will do that in the next session. Okay. So these are all the things that you should know as a rule as well as a standard. So this will be forming majorly 50% of your entire question paper. And whatever questions you get on the practical side, that is the practical approach, I think that is very easy to solve. Once you know the cost accounting standard, you can directly do it. Okay. So I have already taken you through all the problems that is there in the book. You can also go, I have also gone through the scanner. So if you have any doubts, you can get back to me. Just download all the question papers, at least under the new syllabus, and try to solve it. Okay, so that will give you a good insight on the problem side, because that's the proper score. So if you are able to score 40 marks out of 50, like almost another 50% is like management audit, forensic audit and all these things. Even if you aim 50% of that, so 40 plus 25, it will be above 60. You can always score an exemption in this paper. It is easy as that. Okay, fine. So that's all from my side for today. Good night and have a nice evening. Yep. Thank you all.